Hello guys, welcome to my channel. Today I'll be taking you guys on a trade which was taken on EURUSD. This trade was taken based on my setup. So before we get into the chart guys, I always prefer to start the video as from this moment by showing you guys how my setup looks like. This is a diagrammatic view of my setup guys. First of all, I'll start by explaining this setup before we get into the charts. And this very setup you guys are seeing here will be this very setup you guys will see when we get into the chart. So we first of all have to try to understand this setup. So this is a buy setup on my strategy which I use to enter my trades and to take profits guys. So first of all, this dollar signs you guys see here is identified as liquidity. When you see up, it's showing the price direction is about to go up, and down is showing price direction is going down. So for my buy setup, as it's very simple. If we see, if we notice price is falling down and creating lower lows, lower highs, lower lows, lower highs, lower lows, and then we see that price entered a demand zone on a higher time frame, and we got a reaction from here which swept liquidity on the left and broke structure upward to create a change of character, showing us that this high, the value of price here is lower than the value of price here. It means this point is higher than this point, telling us there's a change of structure which is giving us a potential indication that price is about to move upward. And when we see something like this, we should be able to wait to see if there's liquidity on the upside. If we are able to identify zones of liquidity on the upside, we'll be expecting price to move up to those areas to be able to target those liquidities. And also, since we are expecting price to continue to move up to target those areas of liquidity based on the fact that it has shown us that it has changed structure from sell to buy, we should be expecting to see price to go upward. And for us to be able to enter the trade, we should wait for to see if price will be able to retrace back down and mitigate another demand zone which was created on another time frame which can be lower than this time frame or the same time frame as this time frame. So now this is very simple. Price is selling, creating lower highs and lower lows, comes into a demand zone, and we get a reaction which breaks structure to the upside, giving us possibility of a buy. We'll wait for a retracement for price to come back into another smaller demand zone, and we set in our buy order within this area. We set in our buy order within this area in trying to target liquidity that is sitting around here or here. As simple as that. That is our bias. This is the pure setup, guys. So you guys can take a screenshot of this setup, and every day when I do trade recaps, I will start by showing a diagrammatic representation of my setup before going into the charts. So the more you guys watch my videos, the more people get familiar with my setup. I have just a single setup like this. This setup is the same for buy as it is the same for sell, just that it's just the opposite. Where we have demand zones, for sell we'll be having supply zones. Simple as that. I use just this simple setup. I combine everything for this my setup. For me to use this setup, everything has to be in place. So let's get into the chart, guys. Okay, looking at this chart, I would like to start my analysis on the daily time frame. Obviously, before I get into a trade, I always analyze the market from a higher time frame perspective before I scale down to a lower time frame perspective to be able to spot my entry. So looking at this chart, we have two demand zones. We have a 1 week demand zone, we have a weekly demand zone formed on a weekly candle, and we have a daily demand zone. If I go down to the weekly time frame, you guys will clearly see that after this indecision candle here, price was able to push up to the ups, was able to push up, leaving out this demand zone, and price came back and tapped into this weekly demand zone. And also within this weekly demand zone, there's also a daily demand zone. So now I'll just have to first forget about this weekly demand zone and focus on what price is doing on the day, on the focus on what price is doing on the daily demand zone. And going down into the 4 hour time frame, we're able to see how price has been able to push up. But guys, I'll go right down to the 15-minute time frame, let you guys understand how I took this trade and why I took this trade. So going back to the 15-minute time frame, it was, let's scale one time frame below. From the 4 hour time frame, we're on the 1 hour time frame. And on the 1 hour time frame, we saw that as price reacted within this demand zones, I had to scale down to the 1 hour time frame, and moreover to the 30 minutes, to the 15 minutes, and to the 5 minutes time frame to be able to see if I'm able to identify similar structures. You understand? And remember, guys, I always taught you people a simple concept. Once we see wicks like this created where the candlestick is formed, where the candle wick is longer than the candle body, there's a probability that price might go in that direction to fill out this wick. And we see it within this candle, and we see within this candle, the candle wick here, the length of the candle wick is greater than the length of the candle wick, candle body. Here also, the length of this candle wick is greater than the length of the candle body. So there's a probability that in the future price will be able to go up to fill this candle wick. And also, since price is reacting between a 1 day demand zone, which is also found within a 1 week demand zone, we have the high, it's giving us a high probability due to the reaction. We might see price going to the upside, and because of all these ideas, because of all these trade ideas, we are able to scale now to the lower time frame to look for buying opportunities. So scaling, I like to scale to the 30-minute time frame and to the 15-minute time frame. Okay. And what do we see here? Already on the 15-minute time frame, we can see structure. Market created structure here. Yeah. Price came down, started pulling up, came back down again. This this price which came back down was able to, this low came out and swept this low, and then pushed up and swept this high. Understand, guys? Like in a consolidation. So and price started coming down. And what do we see here? We saw Asian low liquidity and Asian high liquidity. Remember, guys, for my previous videos, for my previous trade recap, I told you guys, price always do its best to take out the Asian high and the Asian low, because the Asian high and Asian low are considered points of liquidity. So once price start moving in the London and the New York session, it tries its best to take out liquidity on the Asian high and on the Asian low. So what were we expecting? If we go down again to the 5-minute time frame, let's look after this liquidity has been created. See something. Price took out this Asian high, and upon taking out this Asian high, it created an area of liquidity. It created this area of liquidity. As price was dropping, we're expecting price to also take out this Asian low. And if I put a straight tool here, you guys will see clearly that this is the point of the Asian high. And you guys can see that this candle wick, which is here, took out that Asian high. So what are we seeing? Since this candle had taken out the Asian high, we'll go more than see see what's happening here. Look at this point. We are focusing on price after liquidity has been taken below. This candlestick took out this Asian low, telling us liquidity has been swept on the left side now, and it drove price above. Price was able to break structure here. Price was able to break structure here to the upside. And guys, remember, as I taught you in my setup, price was coming down, created a lower low, lower high, lower low, higher high, swept liquidity to form another lower low, which swept all the liquidity which was here, book structure to form a higher high. So our bias is for price to create another series of consolidation and forming liquidity here, then came and took out the liquidity to go up. Remember in our setup, guys, this is exactly what I taught you guys in our setup. Liquidity was formed at this level. Liquidity was formed at this level. Remember, guys, I taught you guys that liquidity was formed at this level. So once we saw the change of structure here, which broke price to the upside, and we saw this 5-minute order block, what were we expecting? And why did price react from here? Price react from here because if we scale up again to the 15-minute time frame, it was a 15-minute demand zone. It was a 15-minute demand zone which was created. It was a 15-minute demand zone. And remember, I told you once price reacts within a demand zone and we see a change of, we have to, once price reacts within a demand zone and form and give us a change of character like this, what we saw to the upside, we have to look if there's an order block that was left. So if there was a demand zone that was left, once there's a new demand zone that was formed and left without mitigated, we had to wait for price to consolidate and give us a liquidity area, which the liquidity has to be taken out, and then price has to take out the liquidity and come into that our demand zone and start moving up. And as price starts moving up, we have to target an area of liquidity upwards to take our profit. And the most important area of liquidity that I wanted to target was here to take our profit. And normally there are more areas of liquidity, and here we have an area of liquidity, but I did not want to target an area of liquidity so far because the liquidity there was not enough. Because, and secondly, we have this other supply zone. Price might come to the supply zone, and sell. So I prefer to take my profit below this supply zone and after this liquidity. My main target was my main objective was to target this liquidity up here, but it might not happen. Price might come within this zone and react and dump. So I prefer to put my take profit securely below this level. And this was how I was able to make 1:5 on your USD. Thanks for watching this video. It was just a short video to show you guys how I do trade the market. And remember, I'll go back again to this setup. This very buy setup is a very simple technical setup. I use this setup in a very simple way to understand. I will repeat again. First of all, if price is dropping, I'll wait and try to identify a point where price start creating lower low, lower high start creating structure to the downside, and I'll expect price to react from a demand zone formed on a higher time frame, and due to that reaction, price should be able to break structure to the upside, giving us the possibility of price moving much more higher. And also, once structure is broken to the upside and we start seeing a retracement, we, we have to see liquidity formed on both sides of that within that retracement, so that once we see liquidity formed on both sides, the liquidity then price should move down to take this liquidity below and put to come into our point of entry. And now let us enter here and target the next available levels of liquidity to take our profits. This is very simple. Thanks for watching, guys. You comment, subscribe, and share the videos, guys. I promise you guys, just by watching my videos, you guys will get more better in your trading journey. And also, guys, I promise to improve my quality in terms of explanation. You guys also should comment on the comment section. I would like you guys to comment to tell me if you guys are able to understand what I'm teaching. Stay tuned, stay safe, and stay blessed.